workshop, auditor workshop to order at 4:33 p.m. City Manager.
Thank you, Mayor. Again, this is this time of year that we do our annual audit. Of course, our auditors are James Moore from Tallahassee. Today we have with us Ben Clark. It is great that we are now back on schedule of putting our auditing back in place and really getting that behind us. I owe a lot of that to James Moore. They came on a couple of years ago and helped us really put things back on track. And they continue to. They are just not here at this certain time. We work with them throughout the year. Kiki does a really, really good job of working with them. When we have questions about certain things, we always defer to our auditors to give us some advice on a lot of those things. So thank you, Kiki, and thank all of the departments that worked so hard to get back all the information the auditors needed to make this report. And so I'm going to turn you over to Ben Clark from James Moore.
All right, thanks, Vicki. So again, my name is Ben Clark. I think I know most of you guys, but it's great to be with you tonight. And kind of like Vicki said, obviously this is a little bit of a process to get to this point. It takes quite a bit of work to get here, so we're happy with kind of where we've arrived tonight. And just kind of the background, it does take months and months to kind of get the information we needed, close out the system, get all the reports, and test everything. And so once we've kind of done all, that's kind of how we arrive at this point tonight to kind of present to you the final numbers and any findings, recommendations, anything like that that we want to kind of present to you guys. So again, we appreciate working with you guys. It's been a pleasure, and we appreciate the finance team, their department. They work really hard to get to this point. And so without further ado, we can kind of go into the details for everything. And so I heard the CRA meeting was about 7 minutes long, so I'm going to try to do this one in about 2 minutes. Is that fine with everybody?
It's fine with me.
Okay.
I mean, we can call it now if you want to.
Okay. Okay, so the first slide we have here is the kind of same slide we've shown to you the last couple of years, and we like to keep the same format just so you guys are familiar with it. And it's kind of lists out the different reports. So an audit report, an audit has a lot of different reports in it for state and local governments in the state of Florida. And so there's a number of things here on this slide. The first one there is the independent auditor's report. So that's the one that says either the numbers are materially correct or they have qualifications or anything like that. And so as far as that goes, it's the same kind of report we've issued last year where they're basically saying the numbers are materially correct, that unmodified, it's kind of the best opinion you can get. And so all the numbers that you kind of have in your statements that you've kind of seen are unmodified, and you can use those for any decision-making purposes or anything else like that. So that includes all your pension numbers, everything that you want to see, it's in there as far as that goes. The next kind of bullet down is the schedule of findings and question calls. So that is a good schedule to go to if you're wanting to know if you have any findings or if there's anything else that happened. It kind of lists everything as far as the different reports we have in there and any comments we have on those pages. So that's 71 and page 72. And it's also going to talk about the single audit for that page as well. The next report down is pretty important. That's the single audit report. So as you are all aware, you guys do have a substantial amount of grant money come through here through different things like FEMA, ARPA, any state project that you guys have going on. And all of those different grants have different requirements for being audited under the Single Audit Act. And so if there's federal awards, those have to get audited if they're over $750,000. If you reach that threshold, or the state's the same kind of threshold. So those programs that we have listed there, those are the ones that we looked at during the audit that we were required to look at. So that was FEMA, ARPA, and then we had a state single audit project for a state grant that you guys got as well. When we looked at all those, we do a pretty detailed testing as far as expenditures and things like that go, and other compliance requirements. We didn't have any compliance findings or internal control findings as far as those goes, so that's good news. As far as ARPA goes, I think you all are aware, that's the ones where you kind of elected the standard allowance to use those funds, and so now as those funds are used, they'll be reported kind of in subsequent years, so to speak, as those funds are used. So we did look at all the ARPA funds and things like that, and had no comments or internal control findings on that as well. The next report down is the report on internal control and compliance in accordance with government auditing standards. So that's the one where it says we had a material weakness there. So nothing to alarm anybody. I think everybody's aware that closing out the books for the city of Lynn Haven is quite a big venture. It is quite a lot of activity going on with fixed assets, with FEMA and other things. I will say this is a repeat comment. However, we are at James Moore pleased with where the city has arrived at this point with regard to that comment as far as the number of adjustments required and things like that. So we actually are pretty happy with where it's at right now, and we think in the future that'll probably dwindle away, if not go away, depending on how things go. But we feel pretty good about that. Where things go. The finance team has worked extra hard to get to that point, and we kind of work with them throughout the year to kind of work on adjustments or things like that, and they ask us questions, and we kind of go over it, and so that I feel like that one's under control, so to speak. So just wanted to point that out there. The management letter, that's the one that the Auditor General requires to be issued, and so that management letter was kind of everything else goes in that letter. It really has recommendations in it, things like that. Last year there was a recommendation and a requirement for Florida statutes that the impact fees be recorded separately in a separate fund. And so management actually did that throughout the year, and they're now budgeting for that separately. So as you kind of vote to approve budgets and things like that, you will see the impact fees kind of separately stated, if you want to think of it that way. And that's kind of resolved now. So we have that one listed as resolved. The last item there is the independent accountant's examination report. So that's going to be one where we talk about compliance with investment statutes and all those kind of fun things. As far as that goes, we didn't have any comments to make there. So that's listed on page 80. And the management's response, if you're curious of what management had to say with regard to the one material weakness, that is on page 83. And as I kind of go through my presentation, if you guys want to ask questions, interrupt, I'm good with that, or we can do it at the end. Just let me know. So now we get into a little bit of the actual numbers as far as how things fell out at the end of, and keep in mind this is September 30th, 2022, so these numbers are about 6 months or so old now, so I'm sure things have changed since then, but this is where we landed as of September 30th. And so fund balance, keep in mind, is anything left after you pay off all your liabilities. This is assets minus liabilities equals your fund balance there. And what we have is your kind of buckets of money divided into 5 different buckets, going from non-spendable, which is things you can't spend, essentially inventory, prepaid, that kind of thing, all the way down to unassigned, which is kind of the free and clear money that some people call it the reserves, if you want to use that term, on down the line. Some things to note here, prepaid insurance caused non-spendable to go up a little bit, so nothing of unusual nature there. Restricted actually went down a lot, and the reason for that is kind of like I mentioned before, when you break out your impact fees into separate funds and things of that nature, that's going to cause that number to go down because it's no longer sitting in the general fund. So nothing really unusual there, but it does look a little odd when you kind of first look at it if you're not familiar with kind of what happened last year. Down to unassigned, that's kind of what's left over, and that just is going to kind of increase with activity as far as that goes. So the thing with the city's finances that is important to kind of reiterate is when you look, and we'll look at it on the next couple slides, when you look at the reserve balance by itself, you can't really look at it by itself. You have to take it into account alongside things like the Disaster Recovery Fund because there's so much hurricane activity and things hanging out there. So the reserve of the $14.9 million can't just be taken by itself right there. On the next 2 slides, we kind of show you what we mean by that and kind of taking that holistic view. And so if we take the government finance officer's minimum recommendation down there of 16.7%, that's what they say city and local governments should have as a reserve, so to speak, setting aside, and you guys are 80%. However, there's a couple of things to note with that, and that is, again, that's just a minimum recommendation. That's not like a maximum rate. That's just saying, hey, if you need to have set money aside, that's kind of where you need to be. In coastal areas, we probably need to double that just because hurricanes and things of that nature do come through. So that makes sense to increase that threshold. And the other thing is with our kind of fund balance where it lands right now, on the next slide, we can kind of show you where we are with the Disaster Recovery Fund. And as far as that goes, you kind of have to take the general fund balance and compare it to where we're at overall with the Disaster Recovery Fund, FEMA expenditures, and things of that nature, as all that kind of settles out in the next couple of years or so, and the recovery efforts are still happening. And so we do that with this slide. So this is the Disaster Recovery Fund. So it kind of shows you all the different revenues and expenditures and things for the last 3 years. And I would say focus on the bottom 3 rows. So the bottom 3 rows show you that you had $24 million in fund balance in the Disaster Recovery Fund last year, 15.2 at the end of this year as we kind of spend money that we're kind of receiving and things of that nature. What you have to do is keep in mind that the city did take out a hurricane debt bond, so to speak, at the time of the disaster. And so the debt balance at the end of September 30th, 2022 stood at $27.9 million. So when you compare that to what's in the disaster recovery fund to kind of what's outstanding on the debt, then that's how we get that shortfall, so to speak, if you want to call it that. Now, that's not really a true shortfall because you got to think we're not going to close the disaster recovery fund on September 30th. But what you have to do is compare where that kind of stood to where the general fund stood, just to get a holistic view as of a point in time where things stand. So it's, obviously we're not going to close everything in that fund all at one time, but as things kind of settle out and you kind of pay down the debt, you kind of get a view of where, although we have a large general fund balance over here, we kind of have the opposite over here to kind of combine almost, so to speak. So hopefully that makes sense, but if not, I'll try to explain it differently. There may be questions on that so far as the numbers go? All right. So some other things to keep in mind for the audit as far as the other pieces. There was a standalone CRA audit that's required to be issued, and so we did that. No comments or findings there. We do look at the CRA as a standalone entity. That's what the state of Florida requires us to do. Some highlights of that: as of September 30th, they did have about $812,000 in fund balance for the CRA alone. And then that did increase about $293,000 from the prior year. But again, no findings or anything of that nature, and there is a standalone audit. I did provide you all a standalone audit copy just in case you guys want that, so that it is at your, you do have that at your possession. The other thing is with ARPA, that is a newer item this year that you guys didn't have last year on the 21 audit. And so with ARPA, in your statements, that will be shown as assigned fund balance. So as you all spend down the money, that will kind of dwindle down, so to speak. But as far as grant requirements go, since you all reported the $10 million, now you've received a small bit more than $10 million, but for the $10 million, you reported it as under the standard allowance. So as far as grant reporting goes, that money is free and clear, so to speak, as far as the grant goes, and then now you're able to kind of use that for the projects that you've kind of decided on as a commission to use that on. But the grant reporting requirement is met at this point. Now the $200,000 or so that you received extra, that is being reported separately and under the projects kind of initially stated in the ARPA guidelines that the government has for that. The other highlight to kind of note as far as other items go is long-term debt. I think everybody on the commission is probably aware of where we're at with long-term debt, but there was no new debt issued during the year. We did pay down 4.9 in principal, and as of September 30th, 2022, there was about $54.7 million in total principal outstanding. I think if you look at the remaining payments and what's coming up next year, I think we did the math, and I think the rough calculation was you'd be just under $50 million next year if there was no new principal taken out, things of that nature. So if everything just kind of stayed the same and you paid down more principal, according to what we can tell, that's kind of where you'd land next year. But just something to think about there. As far as the governmental activities goes, this is just a slide we like to put in there that just kind of shows you a holistic view of the governmental activities. So that'd be like your general fund, your disaster recovery fund, and then add in all the capital assets and debt with it. And so you kind of got three different buckets of money here. You got your capital assets. Restricted is going to be things that are restricted by grantors or outside entities, if you want to think of it like that. The unrestricted is increased a lot from last year, and a lot of that is because of ARPA. So we report that as unrestricted when we're kind of looking at it in this view. So just something to be aware of there. But you can see that's kind of overall increasing. And really with this slide, we look at it more from a trend basis. We don't look at it from actual balances. We just kind of look at it to get an overall gut feeling of how the overall city is doing from a financial standpoint. This is the business type funds. And so these funds are all go with obviously your stormwater, sewer, sanitation, et cetera. So we did do some pretty in-depth fixed asset work this year to kind of move things around. So there were some changes in fund balances here. But overall, if you were to look in your audit, they all have positive cash flow, which is good. And they actually all, I think, for the most part, had pretty good operating income or a very small operating loss, or maybe even if you factor in depreciation, you get to a positive number. So that's all good. The biggest kind of thing to note here is with stormwater. Actually, the whole stormwater fund itself had more revenue, didn't require those large subsidies that we saw. So that was something that changed from last year. All right, so this is the pension slide. So really what the story here is with the pensions, and we do look at pensions for the audit, and they are included in your numbers. The pensions in this slide, the negatives are actually a positive thing. So negatives are assets, so that means your net pension asset instead of a net pension liability. On the top slide there, you can see kind of the market, a little bit of a turbulent time, with 2021 being net pension assets all across the board, a very positive time for the market. And then at the end of 2022, a very kind of the opposite story for the market. So the thing to kind of remember here, and the thing we always like to tell clients, is you're never as good as you look, and you're never as bad as you look with pensions. And so obviously, in 2021, you looked really good, and now it looks kind of the opposite. It's usually somewhere in the middle, right? So that's kind of the case here as the kind of market changes from time to time. You can look down the bottom and see your funded ratios. So maybe a good benchmark, a rough benchmark, is maybe just somewhere north of 80 as far as your funded ratios go, and you guys are north of that. And so just something to be aware of there, but as far as we can tell, that all looks fine to us. The only thing we like to point out with the pensions is you guys do have a little bit higher of a discount rate than some other plans, and maybe FRS, which I think is at 6.7%. So what that does is just with a higher discount rate, it just maybe make your net pension liability a little bit smaller than if you had a lower discount rate. And over the life of the plan, it could require less contributions, but nothing of concern or anything there. Just something to point out. The discount rate, as a factor of the whole calculation, is a little bit higher. I don't think that's under y'all's control. I think the pension board would have to deal with that or change that, from what my understanding is. But just something like to point out that, hey, it is a little bit different of a percentage than maybe is used elsewhere, and maybe something to think about. But other than that, that is our audit for this year. And again, we love working with you guys, and always available throughout the year if you have questions or anything comes up. And I can entertain questions now.
So, to be clear, and I know you've said this, but to be clear, after your report, after you're working with our staff, you don't have any concerns about how we're handling our finances in the city of Lynn Haven?
No, I think I think we looked at internal controls, and we feel pretty good about that. We look in, I guess, to give you an idea of some of the things we look into a lot of segregation of duties. We look into other things as far as vendors and how those are used, and we kind of do some in-depth testing in a lot of different areas. And so in all of our testing, no, we don't have any comments to make with regard to anything like that.
Got it. Additional questions? All right, thank you.
Thank you.
Yeah.
I'd just like, again, to thank Kiki and Don. Don is here as well. You guys would just come in, and I just want to give them a hand, because this is a feat. And we thank you guys for doing that. That's Don, yes. And we leave from there, and we go straight into mid-year and then budget. So we are fastly approaching all of those things.
Well, and I do want to thank you, City Manager, all of the financial team for the diligence that you've done in oversight of our finances. It certainly makes our job a lot easier and gives us a sense of relief, not just as commissioners, but as citizens, to know that we're moving forward in a good direction with our finances. So thank you all for that. Thank you for working with us again, and thank you for the time you took to meet with us and talk with us, not just today, but with our individual sessions as well. So we certainly appreciate that. That's all. Meeting adjourned.